Cava and Chipotle are two of the more interesting restaurant stocks to consider. While Chipotle has been one of the best performing restaurant stocks in recent years, the company recently lost its CEO to Starbucks. Cava, meanwhile, is operating on a similar model to Chipotle and is finding great success. But which one of these two excellent businesses is the better investment for you? I'm going to answer that question in this video, comparing these two companies on revenue, on profits, on cash flow, and determining the valuation difference and understanding which one is the better stock to buy. I'll answer that question by the end of this video. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, looking at revenue growth in recent quarters, we see Cava Group outperforming Chipotle since January of 2023. That's when we have data for Cava since it's a relatively new publicly traded company. Now, Cava's revenue growth had decelerated, but it's accelerating again, up to 39% in the most recent quarter, and that's two straight quarters of accelerating revenue growth. Meanwhile, Chipotle has stabilized here at revenue growth of double digits, 13% here. Its performance in recent years had been excellent, so excellent that the company increased the pace of new restaurant openings. It was planning restaurant openings of about 200 per year. It increased that because customers were responding to their products effectively. Chipotle had been able to push across several menu price increases, and customers continued going to Chipotle. Now, one of the reasons for Chipotle's great success was because of CEO Brian Niccol, who had performed huge improvements in the company's operations, was quick to adapt to COVID restrictions, and then the company performed well coming out of the pandemic as well, which is one of the few companies that I could say that about that did well during the pandemic and also did well coming out of the pandemic. Many businesses struggled with one of those two sides of the transaction, or not transaction, but one of those two sides of the unprecedented changes. Very few businesses did well on both sides of that. Chipotle had been one of those businesses that did really well on both sides of that unprecedented circumstance. Cava's business is very similar to Chipotle. If you've ever been to a Cava restaurant, they're set up very much like a Chipotle. You go in, you ask for your order, and they go along the lines, just like a Chipotle order line, and get your products out. It's more of a Mediterranean, while Chipotle is more Latin American. And the prices actually are comparative, but Cava Group more expensive on the more expensive side. And still, the company is generating excellent growth, even with the higher menu price items. The next thing I wanted to compare these two on is operating profit margin. Chipotle has done an excellent job in this metric, increasing the operating profit margin from a little over 8% in 2022 all the way up to 17.7% in the most recent trailing 12-month period. Cava Group also has done a great job, already generating positive operating margin despite being a relatively newer publicly traded company, operating margins of 6.12%. And given its menu price items and the revenue growth at these higher priced items, there's potential for really strong profitability longer term for this company. Chipotle, could they continue their excellent performance with new leadership? That's a big question mark for Chipotle. For years, the company's performance has been better than nearly every single restaurant. They've outperformed the industry. It's been one of those outliers like Costco and Tesla that outperformed their industry. Typically, the restaurant industry is not a very attractive industry to invest, but Chipotle had exceeded expectations and delivered great results despite being a restaurant business. It's traded, the valuation has traded like a tech stock because the company's performance has been so excellent. And you see that sometimes when a company is so good at what it does, like Chipotle, like Costco, like Tesla, they trade at valuations that are way above industry standards. Chipotle has been one of those, and Cava has the potential to be one of those as well. Now, when you measure return on invested capital, you get more evidence of how great Chipotle has been at operating the business. 44% return on invested capital and improving over years. Similar story with Cava. It's not as good as Chipotle yet, but it is improving. Although the rate of improvement is not fast enough to catch Chipotle anytime soon. But if they continue at this pace, there is potential for 5, maybe 10 years from now to catch Chipotle in the return on invested capital metric. And finally, I wanted to compare these two on valuation. And I will say that they're both expensive stocks. Cava Group is trading at a forward price to earnings of 230, while Chipotle is trading at a forward price to earnings of 50. Now, one of the reasons why these two businesses are trading at such expensive valuations is because investors are expecting very long runways for growth for Chipotle and Cava. Chipotle, remember, still has several thousand stores it can add in the United States before it feels like this market is saturated. On top of that, Chipotle is still in the very early days of expanding outside of the United States. So, long runway for opportunity there. On top of the new restaurants added for Chipotle, the company is increasing revenue because existing restaurants keep increasing their revenues. So they're getting double-sided growth here with increasing locations and increasing revenue from each location. Now, Cava Group has a similar runway ahead. They're getting increasing revenue from each location, and they have even more potential to add more locations given how they are in the very early days of expansion. Customers are loving their products, and so it's reasonable to assume that if they add more locations, that more customers will go to those locations as well. So all that being said, which one of these two is the better stock to buy for long-term investors? This is a tough one. This is a tough one because they are both interesting companies trading at expensive valuations, and Chipotle's excellent performance to me had a lot to do with the CEO, and I'm a little concerned about if Chipotle can continue that excellent performance with the new leadership. And so I think that's the deciding factor because all else considered, Cava Group is going to grow. It's growing at about triple the rate of Chipotle. So its growth expectations offset the valuation difference considerably. So if I was to pick between these two, it would be close, but I would pick Cava Group over Chipotle. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.